Hey everyone, and welcome back to another portfolio review. So as you can see, in the past week, the couch investing portfolio did underperform the market by quite a lot, 3.8% down, while the market is basically flat-ish. And then also for the year, right now, year to date, the couch investing portfolio is up 1.8%, but the S&P is up 2.51%. Then since the start of this portfolio, it's up 63.7%, whereas the S&P 500 is up 22%. So what have I been doing in the past couple of days with the portfolio? I did close out one position, I added to a couple of others. And of course, as you know, I am now an advanced money destroyer bag holder. And yes, welcome to the new $10 million studio with a very fancy schmancy couch behind me. So what exactly has happened in the last couple of days with the portfolio? Well, let's first look at the overview of this one. SoFi still number one. PayPal number two. It did take a hit, of course, after the earnings report, which in my opinion were solid, not the best ones. Then guidance was a bit lackluster, but as you know, there is that investor day later this month, and I do think that the stock will move after that. Number three is Google, then four Tesla, five Rocket Lab, up 534% on that position, which is why it's the number five position. Uber number six, then we have Intel, Alibaba, dLocal, Micron, Meta, Cash, Disney, Transmedics, AMD, Celsius, Upsellera, and Owlet. Now, I'll be very honest with you. Transmedics, of course, in the last couple of days did go up. I'm still waiting for the earnings report, and then I'll decide whether or not I really want to continue following this company and the stock. And with Celsius, thank God, it's just a small position right now because I'm down close to 50% on that. It's been a huge I wouldn't say a huge drag because it's so small, but still, I lost here 50% of that position. This is not great. I thought the recovery would happen sooner. There were some comments from Pepsi during the earnings call talking about the energy market. They were quite positive on that, so hopefully they're putting a big order with Celsius or just buy out the whole company. That could also be an option, but we'll see. Celsius and Transmedics, as I've said previously, we'll wait for the earnings report and earnings call and see how we will allocate after that, whether I completely sell out, take the loss, or continue to hold these two companies. With Transmedics, I'm now basically break even on that. So yeah, it will just go back into the cash pile or maybe increase AMD. AMD, I'm already down 4.32%. It's actually quite incredible. Now, I know some people will say, oh, but why are you trying to time the bottom? I'm not trying to time the bottom. I just think that at these prices, 107, 110, that's basically where I bought. I thought the value, and I still think the value is quite good. If it goes to 100, then it goes to 100 and I'll just add more. As you see, it's still just a small position in the portfolio. I have time to accumulate and make it a bigger one. The same goes with Disney. I'm at 2.4%. It's also a very new position. I know it's a boring one, but it's one where I think it could anchor the portfolio, if that makes any sense, right? I don't expect Disney to go down 40%. I certainly think that Disney can go up in the next couple of quarters and years. I think the company is becoming more and more profitable. I also think that the quality of the content that they are putting out is way better than the woke BS that happened in the last couple of years. It's not perfect, but then again, Netflix is not perfect either, and that stock is what, at $1,000 right now or something like that. So we'll see. Also, I'm trying to build up that position. Now, what has happened in the last couple of days? Well, the following. First of all, let's go back to the start of the week. So after PayPal's earnings report, I bought an extra 20 shares, so an increase of 7%, bought it at $78.56. Then I went in before AMD's earnings report, a dumb gamble. Okay, I bought only 17 shares at $119.5. Should have bought at the start of the day. I think it was at around 116. Big deal. Then after that, Google reported. I thought it was a solid report. I added 6 extra shares, 5.71% increase to the portfolio. Not such a big increase. Then Uber, same thing here. In my opinion, a very good earnings report. Purchased another 16 shares, so a 10% increase at $64.91. And then after AMD's earnings report, I purchased another 10 shares, an increase of 58.82% at $107. I completely sold out of Pinduoduo, and I'll explain that in just a second. I had 55 shares, sold it for a 9.35% gain. Disney reported. the stock reacted the way it reacted, I added another 15 shares to increase that position by 42.8%. I also added another 70 shares to SoFi, just a 4% increase. It's already the number one position in this portfolio. So yeah, I could have bought 100 shares extra, but then again, it's already number one. So I bought at $15.07. Then on Friday, another 15 shares in AMD at $107.83. That's an increase of 55.56%. So yeah, slowly but surely trying to build out these positions. Of course, with Uber, it was up afterwards because, well, Bill Ackman apparently opened a position in Uber back in January. And I mean, I don't need the market or people like Bill Ackman to pump up the stock. Pump up, it just basically said we were invested, this is why we're invested, etc., etc. I mean, I first bought my shares in Uber back in December. There is that video where I explain why I did it despite being a shareholder of Google and Tesla. I just think there was a lot, and there still is a lot of value to be seen in that company. So great, stock is now at $74.6. We got that little jump from Bill Ackman, so that's fine. Now, with regards to Pinduoduo, I completely sold out of that. One, because, well, I wanted to open that AMD position. I could have just used the cash, but then I said to myself, you know what, actually I have Alibaba. Alibaba was already a bigger position than Pinduoduo. So if I want to go with a Chinese company, I will probably go with Alibaba. Alibaba, by the way, I'm now up 20%. So yeah, things can move quite quickly with that. Alibaba and Pinduoduo, well, the Chinese stocks were basically like a contrarian trade going into 2025. So far, so good. They have definitely outperformed the American companies in this portfolio. And so right now, while we have 18 positions in the portfolio, the bottom two here are basically, well, they don't really move the needle much if they go down. If they eventually play out the way I think it might play out, then it will definitely move the needle from a gains perspective. But if it goes to zero, it goes to zero. Won't really move that much. It's 0.6 and 1.6% of the portfolio. So I don't really care that much about. Transmedics and Celsius are the ones that are, let's pull it in the corner right now, and let's see what happens with those. All the rest here, the top positions, I'm not touching. If we see an overreaction, I will just accumulate just like I've been doing in the last couple of days. With Micron specifically, to be honest, if it stays around $90 or so, again, I will continue to accumulate more and more shares of that company. And the same with AMD. If it goes to 100 or even lower, of course, I will buy just more shares because I don't care. This is not about timing the bottom. This is about being comfortable that the value that you're getting right now at buying shares at around 107, 100, or maybe if it goes to 90, the value just becomes better and better. I said in the previous videos at $200, at 160, 170, it just didn't make much sense. It was, I'll make maybe another video. It was back then, oh, this is the next NVIDIA. And now it's like at $100, oh, it's the next Intel. It's funny how that works, right? When the stock goes up, it's the next NVIDIA, but when it goes down, it's the next Intel. And of course, I still own Intel. I'm down 23.17%. I still think that Intel will work out for me. I know I've been saying that for quite a long time. But yeah, I'm letting this one play out. I think there is a lot of value to be found in $19.10 or even $20, $21. I mean, the assets for whoever is eventually maybe going to buy the whole company at this price, right under $100 billion, is getting a huge, huge bargain. We've talked about Intel and who might be the new CEO with Jose during the live streams. Maybe it might be the ex-Global Foundry CEOs. I mean, if that is the case, I could see the stock jump because he has done an extremely good job with Global Foundries. And of course, Intel trying to become a huge, huge foundry player itself, that could definitely boost the stock's price. With regards to the companies that are yet to report earnings, so we have Celsius, Transmedics, Alibaba, Rocket Lab, and then Micron, I believe that's in March. And the local, I also believe it's later in February. With the local, I still expect it to become one of my biggest winners this year. Unless somebody buys it at a small premium, hopefully that won't be the case. And so that's about it. Don't forget, 2023, 2024, insane years for the stock market and probably for your portfolio as well. So just because January started off slower than expected, or should I say 2025 started off slower than expected, we've had some scary headlines, right? The DeepSeek drama, the tariffs drama. Don't let those headlines destroy your performance, right? Scaring you out of your positions. stay the course, believe in the long-term thesis, and buy the dip when it makes sense, right? When a stock goes up 100% in 2 months and then it goes down by 3%, I'm sorry to say, but everybody that's saying, oh, buy the dip, buy the dip. No, this is not really a dip. It's barely anything, right? In most cases here, the stocks are back to what? To the prices they were at the start of last week, maybe 2 weeks ago. So yeah, it's not such a big dip. Unless a stock goes down 15, 20, 25%, right? We've had ELF, for example, report, guidance comes down, some uncertainties, TikTok, etc., China tariffs, stock went down quite a lot. But the company is still expected to grow quite rapidly, and so that's why you've seen a slow recovery throughout the day as well. Plus, I mean, the stock did get hit, 60%, maybe a little bit even more since the highs of last year. So yeah, just because you're saying, oh, buy the dip, buy the dip. No, don't buy the dip for the sake of saying that you bought the dip, because sometimes you're just putting more money into a company that was priced the same way 5 days ago. Unless, of course, you've got a tree that just produces more and more money by the minute. Then yes, who am I to argue with here? Anyways, that's all I've got for you right now. With regards to next week's earnings, I'll probably only do the interesting ones. So Shopify before the market opens on Tuesday, Supermicro after market, Lyft if some of you are interested in that. Then on Wednesday, we've got Reddit, Robinhood, and the Trade Desk. I still don't know which one I'm going to pick. Probably still the Trade Desk, maybe Robinhood. But I think Amit is going to do a better job with that. Thursday, and by the way, with Robinhood, remember, Arnie and I and Alejandro did a live stream about Robinhood at $8, at $10, I think with only 10, 20 viewers or so. It's now 5x higher than that. Thursday, before the market opens, we've got Datadog, John Deere, Crocs. To be honest, I'm not really interested in any of those companies. After the market closes, we've got Coinbase, Twilio, DraftKings, Applied Materials, Airbnb, Palo Alto, Roku. Probably going to start off with Airbnb, then Palo Alto. With regards to DraftKings, I still think there is some value to be found there. I think they're just going to be making more money in the future as more and more states start to regulate these types of things and open up toward collecting more and more taxes. And if you're interested in Roku and Applied Materials, let me know down in the comment section below. Any semiconductor company that reports, we're probably going to cover Thursday or Tuesday during the live stream with Jose. So all in all, that's about it. Like, subscribe, all of that, and I'll see you all in the next one. Bye-bye.